Hello, everyone. We'll get started here in about 2 minutes. Hey, Wayne. Hello, Rick. How's it going? You guys have a good week trading? I didn't get to trade as much as I would have wanted to. I did take a nice one yesterday. We'll go over that here in a minute. Hey, Matt. Hey, George. Yeah, it's not easy, is it? Well, half the problem is having something that actually has the potential to make you money. Hey, Derek. All right, well, we've got 80, which is not very many compared to how many registered. But anyway, I'm Daniel Rowe. I founded this company a few years ago, Trade the Plan, to, well, I started off building systems for people. I've been trading since 2007. I worked for a private equity fund in Ecuador. Went through the big crash in 2008 and 9, and then the fund ended up losing over. I think by the time all was said and done, they lost about a third. So then anyhow, I was one of the last ones to be hired. So I was one of the first ones to be let go when they started downsizing. So anyhow, I found Bloodhound. I think it was April of 2012 or 13. Anyway, I bought that, and it was the missing piece for me, essentially, because I could then build out and test all of the different things that I had been working on, which is typical stuff that you read in technical analysis books. I can't tell you how many courses I've bought and how many books I've read and how many trading rooms I've been a part of. But anyway, with Bloodhound, I was actually able to start testing and proving out that most of the stuff I had been working on was useless, and then filtering down to the things that were useful. It's been closer to 2.5 years ago. I funneled everything down into the 3 most important methods that I use. The main one would be market geometry, which would be trend channels and median lines and Elliott wave to a certain degree, and then advanced volume analysis. So I use something called relative volume, where I'm actually looking at relative volume relative to the range of the bars, and then volume per range. That's one of the confirming indicators that I use. And then divergence analysis across multiple time frames. So all of this is across multiple time frames. So the divergence and the volume are really confirming tools for me. And then I define the areas that I want to trade from using market geometry. And I've developed a number of different tools for all of these methods, mainly because the tools didn't yet exist. All the divergence indicators that I bought over the years, they're incredibly lacking. They're just super simple. To see divergence on the chart is one thing. It's very easy to spot once you train your eyes, but to define it in such a way that the computer can accurately, find these patterns is a completely different type of a thing. So pattern recognition is some of the hardest programming that there is, which is why it's taken me over 3 years to develop this piece of software. So all of that being said, I planned on releasing this today. I don't know why I do this to myself, and I'm sure, none of the people in my trading room understand it either, but basically I set a date. I'm a partner with Bloodhound. So I started with Bloodhound when they first got started, and then I supplied a service to their customers where people could buy time for me, and then I would help them build out automated trading strategies based on their own rules and indicators and all of that. So being a partner with Shark Indicators, I do webinars with them, for them, and I'm supposed to do one of those about every 3 months. So I kept putting this one off. I put it off 2 months ago, and I put it off last month. And I was going to put it off this month because I was not quite finished with this algorithm yet. I just kind of talked myself into it. So I went ahead and did it. Last week's webinar was a total, it was completely off the cuff, extemporaneous. I didn't have anything prepared whatsoever. This week, I was thinking I would have all of the files done, all of the training done, the website done, all of that. Well, this is such a massive piece of software that it's taken me, I've slept maybe 3 hours a night the past 6 or 7 nights. All of that time has been spent testing, bug hunting, and adding new filters and getting this thing as absolutely perfect as it could possibly be. And we didn't finish until about 11 o'clock this morning. So all of that to say, it's not quite ready for release. I know that's disappointing to a lot of you, and you're here to see this in action. And I am going to show it to you in action. I'm going to walk you through a number of different setups today. We're going to build out a Bloodhound template. I'm going to show it to you in Market Replay, how it works across multiple time frames, but I just can't release it yet because evidently I'm some kind of perfectionist, or at least I think I am. And it's not exactly the way that I want it to be. And I still need to, develop the training material. This is a pretty massive piece of software, and the training is going to be extensive. I want everything to be just right. I don't want to give you guys a kind of a half-baked product, even though I am giving you a half-baked presentation right now. But so anyway, that's where we stand. We're going to release the software for download for the current users before the end of the year. And I'm either going to do the final release webinar either the 29th or I think maybe the 4th of January. So one of those dates, and I'll let you guys know. But I am going to give a really huge discount on it. And this is going to be the last time that I do that, because it's been completely rebuilt, and well, you'll see. It's pretty incredible stuff. So all that being said, I am going to be showing you some trades and some results. Most of those are going to be in sim. Told you last time that I'd been vetting this stuff for a couple of years, and I ran a track record starting last March to April 1st of this year in sim, not recommending that anybody, basically just all for education, not recommending any trades or doing anything like that, just trying to prove that these methods work. And I've done that. And then I just started trading a live account about 5 weeks ago, and now I'm up 63% in 5 weeks. Don't trade with your rent money. If you don't have money to lose, you shouldn't be trading anyway. I'm not trying to claim that, if you trade like me, you're going to be a millionaire, you're going to make money trading. It's incredibly difficult. The methods that I'm using are pretty complex, but they're very synergistic. Divergence is one of those methods. It's one of the things that I use for confirmation across multiple time frames. Let's get into some examples here. All right, so we're looking at crude oil, and this is where it all comes together, is using divergence across multiple time frames. A lot of people would say, you're using divergence. Well, divergence traders always get run over. Well, if you're using one time frame and you're not using any kind of higher time frames to confirm your analysis or your trades, you're definitely going to get run over. But when you use it properly, price momentum divergence analysis is really what helps you fine tune and pinpoint where the market is about to reverse. As far as defining the areas, and I'm just going to touch on this briefly because I don't want to confuse people, and I don't want to try to cover all of this in one session here because it is such a complex kind of a methodology. The main thing that we use for defining where the market is likely going to reverse from is market geometry. When we're doing the market geometry, it's a very complex method. To explain it would take a number of hours, so I'm just touching on it right now just to show you that when I trade divergence, I'm not trading it out in space. Okay, I'm not going to take every single divergence signal that I see, and there's plenty of good reason for that, because divergence is not a system. It's a type of analysis. It's a method. When we're talking about price momentum divergence, we're talking about looking for areas in the market where you have, you've identified very high momentum, such as right here, very high momentum, right? And then we get a bit of a pullback. And then as it goes up a second time, it goes up a little slower. And then we get higher highs in price and lower highs in the momentum oscillator that we're using to measure the momentum. Okay, so we're looking for price to slow down into an area. And what are the areas that we're using? We're using market geometry. And if you would have used back adjusted data here, this doesn't line up like it does here. So the guys in the room have heard me say this over and over and over. Penultimate high to the ultimate high to find the next high. the slope of that median line right there, which is a pitchfork, slope of that median line will typically tell you whether that next high is going to be higher than the previous, if it's sloping up, or if it's sloping down, it's going to be lower than the previous. And this high right here, which is what we're going to play in market replay here in a moment, occurred right on that median line. And you see the divergence lining up right there. So we have a very strong momentum move. Of course, that gap helps it. But even still, even if we ran from the low of this swing, that's still a much stronger move up in price than we see right here. And the divergence algorithm picks that up for us so that we can be notified automatically, or even start to build fully automated systems now, or at least semi-automated. That's what we're looking for. We're looking for price to slow down into an area that we want to trade from. And then, of course, I use the other volume tools across the multiple time frames to confirm this. So I'm just going to show you this very quickly. You see this high right here? This high right here was divergence across every single time frame that I have here. And when you get a confluence of divergence across several different time frames, that is a big indication that you are coming into a high. I mean, you can just look at that and see that momentum is waning there. That's about as obvious as it gets, you know. You can just look at the slope of the market. And what do we have here? But then we have 1, 2, 1, 2, 3, 4, 5, and then 4 and 5. And then there we have 1, 2, 3, 4, 5. So we have a completed C wave. It's just everything in the world came together at this high. That's your 30-minute chart. That's your 75-minute chart. You see the divergence at the high there. That's the 60-minute chart. You see it, it's top right where it says higher high, 122 ticks. That's that high. And then the low just after it was a big divergence signal across all of these time frames. There on the 180-minute chart, you see the divergence signal, 384. Again on the 240-minute chart. But yeah, we had divergence there on the 2-minute. A 4181 tick, which is just a fib number. We have divergence right there. Also shows a double top, which kind of, you know, is a slightly higher high. 10,000 tick, divergence at the high. 15-minute divergence at the high. Every single time frame that I have here, it was hard to find a chart that didn't have divergence there. So when that happens, chances are you're making a major swing high or low. I think I've loaded in, let's see. Each one of these is a different time frame. I've loaded in the 240-minute chart, 4181 tick, 60-minute, 180, 10,000 tick, 75-minute, 30-minute, 15-minute, 2-minute, and a 377 tick. Each one of these charts has, I think the 180 has 300 days on it. 240-minute has 300 days. So think of loading all of those time frames into Bloodhound. Is anyone here not familiar with Bloodhound? I imagine most of you guys have been working with Bloodhound to some extent, but I'm sure there are some of you that are still maybe a little brand new to it. So it's Bloodhound that allows us to build out all of our different rules that we're using for entries and exits. Okay, we define what those rules are, and then we have these little solvers where we bring in the indicators that we're using to develop those rules for our entry. Let's say we were using moving averages or something. When a couple of moving averages cross, then give me a signal. And only do that for shorts if we're below the 200-day moving average on the daily chart or something like that. All right, so we can build whatever kinds of rules we want with whatever indicator that we have. And then each type of condition for the different indicators will be associated with a different kind of a solver. Okay, and then we have function nodes to manipulate those signals, extend them forward, block certain signals. You can get very, very complex and technical with Bloodhound. I mean, basically I can do, I would say 90% of what can be done with handwritten code. And I can do it much faster in Bloodhound. I mean, I can program out a complete system in less than an hour, basically, because that's what I used to do for people. I did that for about 2.5 years, about 8 hours a day. Most of those would not be too complex, and I'd say well over 90% of them were basically not very useful. Most of what people think works in the market just simply is useless information. A lot of people want to throw different equations at price action. Markets don't really care anything about that. So I've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 different time frames in this Bloodhound template. If I were to load the old DivergencesPRO 10 times into Bloodhound on 10 different time frames, it would crash Ninja. It might even crash my whole computer. It wouldn't load because this algorithm is such a massive algorithm and it's running so many calculations. When you bring that onto another time frame inside of Bloodhound, it really just bogs everything down and it refuses to load. So I've got 10 time frames on 8 days. I'd say that's probably about 4,000 bars on this chart, 377 tick chart of crude oil. And I have the divergence loaded on here. And let's see how long it takes to load. 1, 2, less than 2 seconds. Did you see that? 10 time frames with a massive algorithm in less than 2 seconds. If I would have seen this a year ago, it would be jaw-dropping for me. I can't tell you how many templates I've built for people that would take 5, 6, 7, 8, 10 minutes to load, and that's just with a couple of different time frames. So what I've done is I've developed this reader indicator. Let me just show you this real quick. So that's the 180-minute chart. So this reader indicator, which is something that we developed for the toolbar here. What we wanted to do was we wanted to be able to read the values of these lines inside of Bloodhound so that I could build out automated signals with the market geometry, the volume, and the divergence. So we had to have that kind of signal reader that would allow us to read these different values from all the different charts without having to load those charts into Bloodhound. So we did that. It's working and it works well and it's very solid. And we took that idea and then brought it over to the divergence indicator, because loading divergence, like I said, into Bloodhound, it just destroys all your templates, because I have a template for volume divergence. But then if I load our old divergence algorithm into that, it bogs everything down and Ninja starts to freeze. You can only run 1 or 2 workspaces maybe. So it's just a real hassle. So now the DivergencesPRO has been completely updated. It's actually running in real time. It's finding these divergence patterns before the bar closes. So it's doing about 30 or 40 times more calculations than it was before. And it's about 3.5 times faster than it was before. And now with the reader indicator inside of Bloodhound, it's as if we have, like an SMA in here. And what's great about it is we only have to use one solver. So you don't really have to learn Bloodhound to get this working, because it's one solver. That's all you have to know is one solver. And basically it works like this. So that's the 180-minute chart. So you see that? That is the bearish regular divergence setup. All right, when we're talking about signals at all with anything, with any type of algorithmic trading, developing a kind of a trade type, you're always thinking in terms of 2 different things, the setup and the trigger. Okay, so the setup is your attempt at identifying all of the bars that you would search for to begin looking for your trigger. Okay, so your trigger can only occur on or immediately following a setup bar. Okay, so your setup is, XYZ has to happen for me to begin looking for a trade. That's my setup. And then X, Y, and this other Z has to happen for me to pull the trigger. And that's your trigger. So your setup and your trigger. Your trigger is the actual point that confirms your setup or the point at which you initiate the trade. So in terms of the divergence indicator, we have the setup here, which I can turn on. You see that little tiny dot that's being plotted underneath the bar? So the divergence, it doesn't backpaint, it doesn't repaint, and it's not going to start drawing these after the fact. It's going to draw them in real time. When the trigger conditions are met, then it's going to confirm and lock that trend line in place. As it's building, it's going to look like this. See the little dashed line? All right, that's a setup. So I leave these drawing objects in case, let's say if the very next thing that happened was that the oscillator would come up and break this high, well, then it would no longer be divergence, right? So then that trend line would cancel. That's not repainting, that's not backpainting. It's finding a divergence potential in real time. And then if it's broken, well, then it's no longer divergence potential. So it stops looking for the next trigger. Well, I leave these drawing objects on there so that you can know historically where you might have had divergence potential that never actually triggered. So there are multiple different trigger types. The setups are going to be found in real time. The moment we break above this swing high here, you see my cursor? The moment price breaks above that swing high and the oscillator is so far below this previous swing high, that trend line will start painting. And then that setup drawing object will draw. And you can make those as large or as small as you want. So that's the setup. And in real time, the moment that starts happening on your 180-minute chart, Bloodhound is going to paint that signal so we can find, and this is the key, this is what was so problematic for me before, is I would have to wait. You know, if that's a 180-minute chart, that means that I would have to wait for that 3-hour period to close before I would be able to access that setup signal. So that means I would have to wait for the close of this bar before I could retrieve that signal onto my faster time frames. And by that time, what price are we at there? It's at 55. That's way down here. So no way am I going to go short there when my stop has to be behind this downsloping median line there and behind that high, right? How many ticks would that? That'd be over 35 ticks. I typically don't like any more than, 7 or 8, but really no more than 12 or 13. So no way am I going to put on a trade by that time. So that renders the whole divergence thing on higher time frames essentially useless for me previously. But now we're getting that signal the moment it happens. You see, the very second that we break above this high again, we're starting to get that signal, you see. So all of that's occurring in real time, and I'll show you that here in a moment when I start running this market replay. All right, so let's watch this thing in real time. Oh, see, there's the market analyzer. Notice something else though. I'm reading different contracts. I could read on this crude oil chart, I could read natural gas, or I don't know, maybe the dollar or something. And you see 15-minute, where's the 15-minute? See the bearish regular setup right now? All right, so we've got one already active. We're looking for, this is what we're looking for. Looking for a divergence from 3 time frames. One from this set, which is a 15-minute, a 30-minute, or a 4181 tick. One from this set, which is an hourly 75-minute, 10,000 tick. And then one from this set. And there's different indicators on each one. Some of them have balanced momentum, some of them have Gapless RSI. The larger ones, like the 60 and the 75, have Gapless RSI. But the 15-minute has the 310 oscillator. Okay, and then the trigger is going to be double divergence from the 377 tick or the 2-minute. And for this trade, it's the 377 tick that gets the double divergence trigger. That's how fast it loads 10 different time frames with a massive piece of software. 26 files, I want to say about 70,000 lines of code or something. Let me see here. What am I looking for? 15-minute. You see the signal from the 15-minute coming in? That's coming from the 15, yeah, it's incredible, dude. 15-minute chart. Yep, so that signal right there is coming from that chart. Let's see which charts we're actually getting divergence from. So we have it from the 15-minute already. We have it from the 30-minute. We have it from the 4181. We have it from the 60-minute. Have it from the 75-minute. Have divergence from the 10,000 tick. And this is all in real time. We have divergence from the 180 and then the 240. Historically, you'll get the signal for the entire bar. Okay, but that's just the way it is in Ninja. So if you're on a 1-minute chart and then you get a signal historically on a 240-minute chart, on that 1-minute chart, you'll get 240 1-minute bars with the signal. Okay, but in real time, it will only give you the signal while you're actually getting the setup or the trigger, because it's completely real time now, which is incredible. So as soon as we get the trigger from here, the 377 tick, it'll fire off a trade. Well, it's not going to fire a trade. I don't have the strategy hooked up to it. I just have Bloodhound hooked up to it. Come on, trigger. I think it has one more high to make. There it is. Boom. Isn't that cool or what? Pretty amazing to me. I didn't think this was going to be possible, but you finally got it. All right, let's do this now. I don't want to take up too much time, but I do want to kind of talk about the couple of different signals that we have built out, okay? Because we have what's called double and triple divergence. I'm sure most of you have heard about the 3 drives to a high or 3 drives to a low chart pattern. That's essentially what I was trying to go after here with the double and triple divergence. But really the main thing that it's for is to find a series of waning momentum situations in the market. When we're talking about regular divergence, just the type 1, the normal divergence, we're talking about finding areas where the price is starting to slow down. I mean, you can kind of tell just by looking at the slope of price. You can see how steep this trend line is compared to how steep that trend line is, right? This one is closer to vertical than this one is. And then as we draw a trend line from here to here, well, that one's now even less steep than the previous one. And then if I draw to that high, well, naturally, that's even less steep. So we have a series of, we're increasing momentum here, and then we're gradually decreasing the distance that we're traveling and the number of bars that are plotting. So we're no longer moving up at as fast a rate as we were back here. We're gradually getting waning momentum into this high, okay? And that high coincided right here where I shorted, yeah, right here. So that high that we're looking at right here on the 377 tick, where we have double divergence, and I'm going to explain that further here in a second, that's this high on the 180-minute chart. That was that really strong, fast snapback, retracement back up that we saw yesterday, just before lunch, 9:50 my time. Okay, that was this setup right here. You see why I use the market geometry to confirm these areas? It's a downsloping upper median line from the 240, and it's the kiss goodbye line on the 30-minute chart and the warning line of those median. I know if you're not familiar with these terms, I'm probably losing you right now, but that's fine. You don't have to worry about it. Just know that divergence is a method. It's not a full-blown trading system. It's one of the tools that we use to confirm when the market is likely going to stop and reverse direction, where it's likely going to go up, stop, and then turn back down. Okay, so we use the market geometry for finding those exact areas where that's going to occur, where the market's going to reverse, and then we want to confirm that area by seeing price slow down as it's approaching that area. So what we saw here on the 377 tick chart, price did indeed slow down into that area, and then I shorted right there. You see, I shorted 2 right there, and that was real time. I showed everybody that, and yeah, I mean, it was just obvious. It was completely obvious. It hit the perfect spot, and we have a huge momentum divergence into that high. This is double divergence here. You see how price is making consecutively higher highs here, but now we have even more waning momentum. So that's double divergence. There's actually a third signal, which would be triple divergence, which is me trying to find that 3 drives to a high or 3 drives to a low. Right there. That's the triple divergence. You see that on your 6-range CL chart? That is triple divergence. So you see the low of the day today, double divergence. High of the day, I'm sorry, this is yesterday. Low of the day yesterday, double divergence. High of the day yesterday, double divergence. That's where I shorted. Okay, and then I got out right there. Why did I get out right there? Well, right down to the lower median line right there. Perfect. So I kind of wanted to hold one contract, but then there's no sense in doing that into the overnight, and you know, who knows what's going to happen. It's low volume and all that. But anyway, I think it was 55 ticks or something. Yeah, 56 ticks, something like that. 11 to 1. I had a 5-tick stop on it, and you can see that 5-tick stop right here. I typically like very small stops. Of course, everybody would, but when you have an area protecting the trade, you know where your stop should be. That's a little bit too tight, I think, but I got away with it. So 11 to 1. And if you can do that consistently, how often do you have to win in order to break even? About 14% of the time to break even. So if you can do that 20% of the time, then you're making money. It's, you know, it's all about numbers and statistics. That's all this is. But having the right information is what's key. You can throw all kinds of equations and arithmetics at this, but a lot of that's not going to help you. So anyway, that's the 377 tick. Sure, we had divergence. We had double divergence. So we had double divergence on the 377, and here we have double divergence on the 2-minute. You see why I pulled the trigger on that? I had 2 areas coming together on my higher time frames in the market geometry, and then I have double divergence across multiple time frames, confirming that high there. This is the key. I mean, it's all about setting up the area where you want to do business. That's what volume profile is all about as well. It's just not as precise, I would say, as far as from experience. Market geometry across multiple time frames is as precise as you can get, really. Then confirming those areas with the relative volume and the momentum divergence across multiple time frames. So for me, this stuff works very well, and I'm able to pinpoint with precision, oftentimes, not all the time. I don't have to be right all the time, but my exact entry and my exact exit. And it's typically very close to where the market's going to reverse. So yeah, I mean, it is all about percentage, which is right. But it is very complex stuff. So, but after you learn it, at least you'll know quite a bit more about the market and why it turns where it does. From what I can tell, pinpointing those areas where the market is going to reverse is probably the most useful information you could have as a trader. Is having a very good idea as to where that market is likely going to turn on a dime and then head back in the opposite direction. I'll take this opportunity to kind of explain the swing trend indicator for a moment. I added this swing algorithm to it. This was the hardest thing I've ever developed, actually, the swing algorithm, believe it or not. It's just mind-numbing stuff. Anyway, the reason it's so mind-numbing is because I decided to do it, and this is what makes it more accurate. I decided to make it not like a zigzag. You know how a zigzag will go from high to low to high to low? You see? It never goes from a high to a high, right? So it's always high to low to high to low. Well, in very many different situations, that's not a good thing. So what we're doing is we're looking at the highs and lows independently of one another. We could get two swing highs right next to each other without a swing low. You see how we have two swing lows right here without a swing high in between them? So if I then want to use this algorithm to count waves, I know that this is an ABC without being able to identify that B wave. How do I know that? Well, I know that because I have a swing low here and then another swing low just after it. And that one just after it is of 1 degree larger. So I know that there's a swing high in between them. I just wasn't able to isolate it with the algorithm that I'm using. So that makes the possibility of doing more and better pattern recognition feasible now. So I did this, independent of one another, minor swing highs and lows, and you can control all of the visual displays from this user interface here now. But I can turn these labels, type distance. You can put the distance in ATRs, percentage of the average true range, which is looking at a 200 period average true range. You can set that 200 to whatever you like. So it's going to tell you how many ticks or how many ATRs large the swing is, and whether it's a higher low or lower low. So we're looking at minor swing lows to everything else to judge whether it's a higher low or lower high. Okay, we're looking at intermediate swings only with intermediates or majors to determine trend, whether it's high or low or low or high. And then we're looking at the major swing highs and lows only relative to other major highs and lows. You can mark each one of these swing highs and lows. You can show only the active ones, how far you are away from it. We're actually going to expose the values of all these lines so that you can access them inside of Bloodhound. If I want to add another indicator onto here, let's just say I remove everything. All right, I've got here, what is this? An awesome oscillator. It's awesome. And then I want to take and put divergence on there. This is how I do it. I load the divergence indicator after the oscillator. And then you see here, select indicator component. Being able to do this right here took about 3 months to figure out, which is part of the reader indicator feature. So this is how we're able to load that data series into the DivergencesPRO. So it's basically like an indicator on an indicator. And then I put it on the same panel right here. That's why I put the panel just above it. So that's on panel 2. I load the awesome oscillator into here, and then I plot DivergencesPRO on panel 2. Boom, then you got divergence. So what we want to do, and this is going to make it possible for the for you to build your own strategies, use the strategy wizard. Of course, you can already do this in Bloodhound, but if you wanted to build your own strategies, then we have to figure out that user interface for that indicator component. And I think what we're going to do is here have the full list of NinjaTrader indicators as a drop-down list. And then from there, it'll be easier to do that. So Rasul is saying he wants to be able to see a divergence with a price volume thrust. Yep, so you could easily do that. You could, add divergence into Bloodhound, and then in Bloodhound, you can easily show, when you have, you could put a standard deviation on volume. You could use my volume indicators and do that very easily when you get a spike in volume or an upthrust in volume to confirm. So I imagine that's exactly what's happening on that bar right there. Increase in volume. All right, now let me just go over a couple of different filters briefly. You have different controls here, different filters that you can turn on or off for controlling the look to these signals. This is really what sets this apart as far as how accurate this is. When I say accurate, I'm not talking about defining for you a specific spot to enter the market. When I say accurate, we're talking about how accurate is the algorithm in doing what it's supposed to do. We're trying to find waning momentum. Does this actually do that? Or is it finding some bad signals too? Or is it missing some good ones? Well, literally, I've bought every single divergence algorithm that's available to the public. And I don't know what it is, but am I the only one that really takes this stuff so seriously that I want my tools to actually work the way they're supposed to work and not just try to make a buck off of somebody? So I've taken this and actually made it as accurate as it can possibly be through the use of all these different filters and this swing finder algorithm, which I'll talk about after we set this trade up. Okay, so I take pride in what I do. I want perfection, but it's not achievable, but I want things to be just so. I want them to be exactly like I want them to be, and I'm not happy with it until it is. So that's why I'm in a constant state of development mode, trying to get these tools to the level I want them to be at so that I can trade the way that I want to trade. It's all about saving time and doing as much excellent analysis as quickly as possible without sacrificing performance, but number one, without sacrificing your trading account. So good, clean, very accurate analysis, be able to do that across as many markets as possible so that you can take advantage of more and better trade setup scenarios, right? It's all about speed and accuracy without sacrificing performance. So that's what I'm after. And unfortunately, I have to sell this stuff to be able to pay for the development. So once it's all done, then it's not going to be for sale anymore. Price line broken by N ticks regular. You see that line right there? See how ugly that is? If I wanted to get rid of that, I say, well, it's a 240-minute chart, so each one of those bars is probably about 30, 50 ticks. I can set that to 10 ticks, and it will eliminate that. Okay, now all the other filters have to do with the swings, whether you're allowing a certain number of swings in there or not. Just know that this thing is as precise as you need it to be, as you want it to be. And then we'll get into the details of all of that in the training material. Now here we have what's called hidden to regular divergence. All right, so actually somebody specifically asked me for this, and then I started looking into it, and it's actually pretty interesting. So it would be essentially a failed hidden divergence signal, and if you've watched that video on the website, then you know what hidden divergence is. Hidden divergence is not looking for really anything to do with momentum. It's just, as far as I'm concerned, it's basically just a resetting of the oscillator, really, which kind of helps you identify pullbacks. So more often than not, the hidden divergence will end up being a type of trend trade rather than a reversal, as we're typically looking for with regular or type 1 divergence. So this is a hidden divergence, and they're usually quite large, so I make the look back setting for the hidden divergences a little bit bigger. Right here, 100 bars, that's really not enough either. 80 and 140. And you can control how many swings there are in between, and you can control whether you allow it to draw to these little swings. So I've elected not to find hidden divergences unless they're attached to very large swings, major. Okay, and then I'll set this one to major too, actually. And these, if you go up, then it's looking at less swings, the indicator loads faster. So if you do all majors, then the indicator will load very fast. Okay, so hidden to regular is basically a failed hidden divergence signal. So there we have hidden divergence. let's say it goes up. There it confirms. Let me turn on the triggers and the setups. It's nice having this because you don't have to reload the indicator. So then it comes back and it fails, right? Well, as it fails, you actually get a bullish divergence signal, a regular bullish divergence signal. And then that confirms right there. It's an interesting kind of signal there. I've never really given something like that much thought, but then somebody asked for it and I started testing it, and it actually sets up some really nice trend trades. So it's basically like a failed hidden divergence that sets up as a bullish divergence, and then that will go out to double and triple as well. Let me show you this because this is really cool. Somebody else asked for this, and this is all of this is real time. All right, the three triggers that wait for the bar to close are the oscillator turn, which is just the oscillator turning in favor of the signal, the weak thrust, and the strong thrust. Those are just different types of bars. A strong thrust has, for an up thrust, this would be an up thrust right here. You see how the close is higher than the previous bar's high? That's an up thrust. A weak thrust would be the high breaking the previous high and the close breaking the previous close, but the close not breaking the previous high. So all of that's going to be in the user guides and all that. Okay, these three from here down are real-time triggers. All right, so DivergencesPRO is always calculate on bar close false, always. If you load an indicator into it that's not set to calculate on bar close false, it'll throw a little message and tell you that it's going to set it to calculate on bar close false for you. Okay, but these three are real-time triggers. Now this fib retracement here is pretty cool. You can set a percentage of the swing to be used as a trigger. You see that? So what it's doing, I've set the fib retracement trigger to 30%. You could set it to, 23.6 or 38.2 or something fancy or whatever. You see these two swings? This swing low and this swing low? Well, we're using this swing high to measure the distance. So we have 30% right there. Isn't that cool? And that's going to be real time. Yeah, it took, that was the, I don't know what the deal was with that, but that was incredibly difficult to get right. That took me about 8 hours of bug hunting to get that to work right. Back and forth, but it's finally correct. And in real time, all you have to do is break that by 1 tick. I think we're going to add in a property to, fib must be broken by n number of ticks or percentage ATR or something, but that is a new trigger. And then here for the regular divergences, it's going to use, basically for every signal, it's going to use for a bullish signal, the highest high between the two lows that are found. And then for a bearish signal, the low between the two highs that are found. You see? So that's 30%. And then you can elect to leave them on the chart or remove them once they're broken. Here I'm just leaving them. And then it shows you when it was broken. So we tried to get the triggers that are real time to line up as close as possible for historical trades so that you could have at least somewhat accurate backtesting. But backtesting and real time are two totally different things. So that's a cool little trigger. And this little setting right here, so when you get this and you're kind of wondering why it's not painting all the way back, if this setting is set to true, this is limited view. This makes it load much, much faster. Let's say you have a chart that needs, 100 days on it because you're performing some sort of calculation and you need that much data with a 5-minute chart or something like that. You can set this to true, and then it will only load the visible portion of the chart and not, you see how fast that was? Let's see how fast that was again. It was pretty fast. So let's turn that off and it'll take longer to load now because I'm running those calculations all the way back to the beginning of the chart. Just slightly longer. You'll notice that more on a chart that has a lot of days back. I added this one in for myself so that I could do some different types of testing. I basically elected to not show hidden divergences immediately following, well, let me just show you. No hidden divergences following a regular divergence. All right, so I'm going to set this to find both hidden and regular oscillator term. This is a 6 range chart. Obviously, this can work on any chart type. I need to turn that limited view off. So we turn that off. So you see this, and this was from the report, which is why it went sideways for that many bars there. But here we have a hidden divergence setup immediately after a regular divergence signal. So I wanted to disallow those for testing so that I could test the hidden divergence signals with some other trend filters, and basically only allow hidden divergence signals with the overall higher time frame trend. And I wanted to be able to turn those off, and I went ahead and added that filter to be able to do that. You see? So that's one of the other new filters here. Okay, this is the 310 oscillator. I give you about 9 different oscillators just to give you a variety of things that other people, might talk about in different trading books or forums that Ninja doesn't necessarily have. The 310 oscillator, it's just a MACD is all it is, except we're using an SMA. You know how people will take an indicator, change a couple of things to it, and then name it after themselves? That's what somebody did with this. They changed the EMA to an SMA, changed a couple of numbers, and then gave it their last name. A normalized MACD, and I'm going to get into how I've set this up to be able to load the same indicator with the same settings across any instrument, any time frame, any look back period on the chart, any chart type. It's really pretty cool what we've done here, but the normalized MACD is going to have the same exact scaling on every chart, every time frame, every instrument chart type. Okay, so on the 377 tick, this upper bounds here, and this is an unbounded oscillator, the MACD, all right, but I've added some overbought, oversold levels. It's just a kind of a visual guide. So typically, it's going to oscillate between positive 25, positive 30 to negative 30. When you get very, very strong momentum, then you get stuff like this happen, where you get these kind of 6 sigma kind of a move. And that's something to pay attention to as well, which is why I've added this overbought, oversold kind of a thing on here and normalize the MACD so that you can get a feel for how does the MACD typically move on this market, on this time frame, kind of get familiar with that per the market you're trading. So here with the Z-score, what I wanted to do, let me show you how this works. When we load any unbounded oscillator, such as, the MACD, not the normalized MACD. I made the normalized MACD so that we could avoid this problem. But most of your, well, let's say the balanced momentum or derivative oscillator, when they're unbounded, the scaling is determined by, I think the derivative oscillator is a little bit different. It's unbounded, but it has a kind of similar scale across different charts, I think. The scale is determined by the movement in price from one bar to the next and the actual price of the instrument. So that's what determines the scale here. So on one chart, you may have, 2, 3, 4. On another chart, you may have 0.02, 0.04. Okay, so to avoid having to do so many different settings from one chart to the next, and let's just show you the balanced momentum here. To get this thing into DivergencesPRO was probably the biggest nightmare that we've ever faced with anything. So you see the scaling here is the balanced momentum is typically between 0.2 and negative 0.2. Here it's typically between +2 and -2. So you would have to have totally different settings on every single instrument, every single chart, right? Well, with that Z-score, and I have that loaded on the 310 oscillator, the balanced momentum, but not the normalized MACD. So balanced momentum or 310 oscillator chart templates, and I'm going to have a ton of different chart templates. Each one of these can be used on any chart, any instrument, any time frame, any period type, and it's always going to have your scaling and standard deviations above and below the mean. Okay, otherwise you would have to, go in there and fine tune all of these little settings, which a lot of you are really, probably very few of you are actually going to go in and learn the details of all this. I know that's how it is for a lot of people. But really you don't have to, which is why I created this preset. And I'm going to add some more presets by the time we release this, but let's say you're using the RSI. Well, you click on RSI and it changes all the values for you. Okay, I'm also going to have a lot of chart templates to make this as easy as possible to get up and running immediately. Let's say you're using the TSI. Well, that's bounded typically by -30 and +30. Well, that's the typical scale. It's an unbounded oscillator as well. But and then normalized MACD, well, that's above and below +20 and -20 typically. So that has a certain set of settings. And then your MACD has a longer look back period, so you want to use typically a longer look back. So I've accounted for pretty much every single possible detail that might arise in your divergence analysis, as far as being able to precisely find the exact look to the very specific divergence signals that you're looking for. It's just a really well-made piece of software. And it's actually a useful method. It's not something, I'm not ever going to market something that's not going to benefit you as far as your analysis and your trading. That's not saying that you're going to buy this and then somehow make money magically. It's going to benefit you in your analysis of trying to find major highs and lows, because you see this set up at most of your major highs and lows. You see divergence. This is a gapless RSI, so it removes the gap between the bars for me, because I don't use back adjusted data, because I want the truly traded prices to build my market geometry areas from. This gets rid of the gaps. Basically, a lot of times the oscillator will get skewed when it goes through a really large gap, and you get this kind of 6 sigma type of a move, and then it messes up the scaling for the next 30, 40 bars. So this just avoids that. I'm going to make all of our other oscillators gapless in the future. With the alerts, the email system that we're using our own server. So you don't have to set up anything in NinjaTrader. You just type in your email address and then turn the alerts on that you want to use, and it will find a TTB folder. We're going to probably modify that, but rather than finding your NinjaTrader sounds folder, which is in the C drive, deep in the program files, it's going to go to your TTB folder. Most of you don't have one, but if you have the toolbar, then you have one, and you can store all of your sounds here and then access them from there. Okay. Now you can turn on the screenshots, and it will actually take a screenshot of the chart and save it to one of these folders that you select right here. It'll save it to that folder, and then it will also email that screenshot to you if you want to get a look at the chart from the alert, and then decide whether you want to go to your computer and take the trade or not. So that's a nice little feature. And see, I can back off the divergence drawing objects here if I want. I can offset them, in pixels. That's good for us as we're doing market geometry. So the trend lines for divergence signals won't actually be touching price now. So that's a nice little simple feature. I mean, I'll send out an email with all the details about the actual release date that we're going to have. Let me just put it like this. I'm updating all of my software, and it's been a process that's been going on for over a year now. When I'm done, see, this new toolbar was the major piece of the puzzle. This had to be, we had to create our entirely own and separate drawing system from Ninja. So it's basically like we're using Ninja as a canvas, and then this is able to paint on that canvas. And then we can access all of these values from within Bloodhound. Now that we can do that with the DivergencesPRO, the only thing that's missing would be the signals from the relative volume indicators and all my other volume indicators, and then the volume profile, which is going to be a part of the toolbar, and then the VWAPs, the volume weighted average prices. So once I have all of that done, then I'll actually be able to approach full automation. It'll be the first time that it will have been possible to do so with the methods that I'm using. Anyway, it'll still be semi-automated because you'll still have to draw in the market geometry, and you'll still have to turn it on and off, so it won't be fully automated. But I'll get to the point to where it's going to be easier to manage more markets, you know, through the use of technology, through the use of Bloodhound, Blackbird, and then all of my tools. So all that to say that I'm not, you know, scarcity or blah, 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 or whatever. I'm not doing that. I'm just telling you that the price is going up. It is, because the tools are getting better and better. It's cost a lot of money to do this stuff and a lot of time. So the prices are going up, and I'm going to do the divergence indicator by itself for $995 for the last time. From here on out, it's going to be $14.95. Okay, so it's going to be $9.95 for the next couple of weeks, and then I'll probably give a few days after the actual next webinar, and then a package with Bloodhound. Bloodhound is normally $4.95. We'll do it for, I think, $4.45. Not much, but $50. So that would be $14.40 for both Bloodhound and DivergencesPRO. And that will include several Bloodhound templates, a ton of training because it's absolutely essential. So it's going to be several hours, probably a few dozen hours of training, which I'm going to be making over the weekend and the break, and hopefully have done at least the first 15 or 16 hours by the time we have the next webinar. So all of that, Bloodhound templates, I'll have some Blackbird templates, some basic stuff, but then teach you how to make your own templates, because now it's just one solver. So if you can master that one solver and piece together some logic, then it's going to be feasible for, you know, non-computer guys to actually start building stuff with Bloodhound once I get all the stuff done the way that I want to. So all that to say that the prices are going to be going up. So if you want it, now is the time. If you're interested in the full suite, the toolbar is separate. It's not coming with this Divergence and Bloodhound. You can get that separately, but you can also get the entire suite of tools, which would then allow you to sign up for the trading room. Okay. So if you're interested in doing that, I don't really promote that. I don't really do a lot of marketing about the trading room. I don't have anything on the website written about that. But if that's something you're interested in, then just send an email to Clint and we'll give you a discount between now and the first of the year. We'll figure out some kind of a package for you, whether you've got some of the indicators already, or there's the email, support@tradetheplan.com. No, it doesn't come with the room. The room, you'll be able to sign up for the room after you get the master suite. The room is $199 a month. 3 hours we went. Can't believe you guys are still here. Thanks, everyone. Merry Christmas. Have fun with your family.